That's certainly one part of it, but if you look at the cash burn, leaving the quarter with $2.2 billion, much better than people expected. I think a lot of people are expecting a bigger loss, expecting exiting in the $1.5 billion range and bringing more concerns of an imminent capital raise. That doesn't seem like it's going to need to take place. So numbers were a lot better than feared from that front, and I think that's really where investors were focused for this quarter.
Gabe, Tesla's your fund's biggest short position. It's up 6%. Are you hurting right now?
Absolutely not. I plan to add some more when I get back to the desk. The cash balance isn't all it appears when you dig into the numbers a little more deeply. Here's what I mean. The $2.2 billion in reported cash, well, $940 million of that is customer deposits. That is, it doesn't belong to Tesla. So the real cash that Tesla has, which it owns, is $1.3 billion. That's less, substantially less, than the current bills due on its desk, which soared $400 million to $3 billion in accounts payable this June 30th. And finally, I might add that Tesla burned all of this cash despite the long-term debt increasing a whopping $750 million in the quarter to $9.5 billion. So I do believe Tesla faces an imminent liquidity crisis.
Gabe, what would be your top question if you were on the earnings call and you got one to Elon Musk?
My top question would be, can you tell us how you plan to meet your promise of being cash flow and GAAP earnings positive in Q3, Q4? Or is it just another broken Elon Musk promise? Specifically, talking about margins and talking about what do they include and not include in that figure. For example, do they assume that suppliers will continue to extend them credit as they have done an additional $400 million this past quarter? Do they assume a lot of zero-emission credits? Or do they assume that they will be cash flow positive from actual operations? Those are important questions.
Brad, I mean, how do you respond to this idea that essentially, from a financial perspective, the business model has not proven itself out, and as Gabe suggests, maybe they will, in fact, need to be raising capital and get a bridge to whatever production needs they have down the road?
Yeah, I mean, and you can make arguments like this for the last several years with Tesla. I mean, clearly it's not a profitable company. It hasn't been profitable. It's almost looking like Amazon, where you're just in spending for growth, in which they have done. To me, it's not that important to actually hit the absolute numbers in terms of targets from Musk. I think if you directionally are close, that's just as good because you're moving in the right direction. They're executing a lot better than anybody thought. Nobody thought they'd hit 5,000 Model 3s, and now you're getting the 6,000 by late August. Numbers are moving in the right direction now. Gabe brought up a good point. Is that 900 million extra part of it? But those customers aren't going away, and those customers are buying Model 3s. So you have 420,000 people that are looking to buy this car. So that those are going to be realized. And this is all positive for the company. Absolutely, they need to get to profitability. Will it happen by the back half of this year? That's remained to be seen. But if they're close enough, investors are going to give them that wiggle room, and the stock's going to perform.